E-mini S&Ps open up the week with a big move higher, seeing the March contract get back above 5,700. I note the March contract because right now we're in the midst of the roll period. So whichever you're looking at, March or June, E-minis were up about 1% today, taking back much of the losses that we saw last week as stocks continue to wait and watch for the Fed later this week. Today we had the Empire manufacturing data along with retail sales. Both came in weaker and both helped to push the stocks higher across the board. Again, seeing E-minis rally 1% today and in the March contract closing north of 5,700. Now, what does this mean for volatility? Well, as we've talked about over and over, as we see the underlying indices rally, we see volatility doing the opposite, and that's exactly what happened today. Volatility went down to its lows of the month as we see indices rallying to start the week. Lastly, let's talk about what we have tomorrow. Tomorrow's Tuesday. We get a bunch of data coming out. We get some housing data, import-export prices. We get industrial production, capacity utilization, but as we all know, the market forward-looking, we'll be looking ahead to Wednesday when we get the FOMC statement, we get the updated economic projections, as well as the press conference from the Fed chair, where the market will be looking for clarity about potential rate cuts down the road. Right now, the market is still leaning towards a 25 basis point rate cut at June FOMC, but obviously a lot can change between then and now.